We saw this in January of 2016 when we were teaching the class. Dow was about 17,000 at that time. And then when you have that kind of event, these people step up their advertising. More on this guy later. Dow to drop 80% in 2016. Okay, I'm going to show you a little bit more about this guy. And then we have George Soros. It's 2008 all over again. And then we have City World, right? The economy is trapped in a death spiral. Yeah. But you see this, and then they go on TV. Here it is.
Strategists at Citi say the global economy seems caught in a death spiral because of a strong U.S. dollar, weak commodity prices, slowing global trade, and lackluster global GDP growth. In a research note released Thursday, the strategists go on to call the cycle Oilmageddon and say those four factors have created a negative feedback loop for global markets. According to Citi, the so-called negative feedback loop could snowball into a, quote, significant and synchronized global recession and, quote, proper bear market in stocks. The note from Citi comes as more analysts have turned bearish on the world economy following a deep market sell-off in January and weakening economic data in the U.S. and China.
Okay, could have a synchronized global recession. This was February 5th, 2016, the day that came on the TV, a week before the bottom of the market. A week before. And when you're going through it and you're having these significant downturns, because it was a significant downturn, and something like this pops on TV, and you're thinking that it's going to continue, and you act on stuff like this, it can cost you big time. And the reason we show this kind of stuff is just to show you not even these experts have any clue of what's going to happen. So you'll see that throughout the class today. This is 6 weeks later. Dow on track for the biggest quarterly comeback since 1933.
Now time for Trading Nation, because traders do trade better together. We're all together. And today, let's take a look at the market vis-a-vis the Dow. It is turning positive on the year. You might have heard that once or twice today. Get this. If it were to close the quarter right now, this would be the biggest quarterly comeback since 1933.
Yep, and it did have the biggest quarterly comeback since 1933. And the point is, yeah, downturns can happen quick, but upturns can happen with the blink of an eye. You're out in cash on February 5th, and then bam, you miss it 6 weeks later. It's up, biggest quarterly comeback.